Ever found yourself in a tight spot, needing cash quickly, and stumbled upon CashNetUSA? You're not alone. Millions of people explore short-term loan options like these every year. But the big question that's probably on your mind, and the one we're tackling today, is, are there any fees for using CashNetUSA? Before we dive into the specifics of CashNetUSA's fees, let's paint a picture of why someone might consider a service like this in the first place. Imagine this. Your car breaks down unexpectedly, a major appliance goes kaput, or an unforeseen medical bill lands in your mailbox. These are the kinds of situations where access to quick funds can be a real lifeline. Traditional loans from banks can take time, involving paperwork, credit checks, and waiting periods. This is where short-term lenders like CashNetUSA position themselves, offering a potentially faster alternative. Now, it's crucial to understand that faster often comes at a cost. That's the core of our discussion today, the fees. It's a common misconception that if a company advertises fast cash, it means cheap cash. That's rarely the case. Short-term loans, including those offered by CashNetUSA, are generally known for higher costs compared to traditional loans. These costs come in various forms, and it's essential to understand each of them. So, are there fees for using CashNetUSA? The short answer is a resounding yes. There are several types of fees you should be aware of. The most significant is the finance charge, which is essentially the cost of borrowing the money. This is expressed as a dollar amount and is directly related to the loan amount and the loan term. The longer you borrow the money and the more you borrow, the higher the finance charge will be. It's important to distinguish the finance charge from the annual percentage rate, or APR. While related, they aren't the same. The APR represents the annual cost of borrowing, expressed as a percentage. Because short-term loans have such short terms, the APR can appear extremely high, even if the actual finance charge isn't astronomical in dollar terms. For example, a $100 loan with a $15 finance charge for a 2-week term might translate to an APR of nearly 400%. This high APR doesn't mean you're paying $400 on a $100 loan. It simply reflects the cost of borrowing over a year if you were to renew that 2-week loan repeatedly. Beyond the finance charge, there might be other fees associated with CashNetUSA loans. These can vary depending on your state of residence and the specific loan product you choose. Some potential fees include late payment fees, which are charged if you fail to make your payment on time. There might also be insufficient funds fees, which are incurred if your payment bounces due to insufficient funds in your bank account. These fees can add up quickly, further increasing the overall cost of the loan. It's absolutely crucial to carefully review the loan agreement before you sign anything. This document will outline all the fees associated with your specific loan, including the finance charge, APR, late payment fees, and any other potential charges. Don't just skim it. Read it thoroughly. Understanding the terms and conditions is essential to avoid any surprises down the line. Now, let's talk about how CashNetUSA presents this information. They are generally required by law to disclose the fees and APR clearly in their loan agreements and on their website. However, the way this information is presented can sometimes be confusing. It's easy to get caught up in the promise of fast cash and overlook the details of the fees. This is why it's so important to be a diligent consumer and do your own research. One thing to keep in mind is that the fees and APRs for short-term loans like those offered by CashNetUSA are typically much higher than those for traditional loans from banks or credit unions. This is because these loans are designed for short-term needs and carry a higher risk for the lender. They are generally unsecured, meaning they aren't backed by collateral like a car loan or a mortgage. This higher risk is reflected in the higher cost of borrowing. Another important point to consider is the potential for a cycle of debt. If you're relying on short-term loans repeatedly to cover expenses, you could find yourself trapped in a cycle of borrowing and repaying, constantly paying fees and interest. This can be a very difficult situation to get out of. It's crucial to use these types of loans responsibly and only as a last resort for genuine emergencies, not as a long-term financial solution. So, to reiterate, yes, there are definitely fees for using CashNetUSA. These fees primarily consist of finance charges, which are directly related to the loan amount and term, and can translate to very high APRs. There might also be other fees, such as late payment fees and insufficient funds fees. It's essential to carefully review the loan agreement before you commit to anything to understand the full cost of borrowing. Before taking out any short-term loan, it's always wise to explore other options. Consider talking to your bank or credit union about a personal loan or a line of credit. You might also explore options like borrowing from family or friends, or seeking assistance from local charities or community organizations. These options might offer more favorable terms and help you avoid the high costs associated with short-term loans. Using short-term loans responsibly requires careful consideration and a clear understanding of the costs involved. Don't be lured in by the promise of fast cash without fully understanding the financial implications. Do your research, compare your options, and make an informed decision. Remember, fast cash is rarely cheap cash. With that said, thanks for watching, and until next time.